Hey there, welcome everyone to another episode of the RocketMSP Podcast. I'm Steve Taylor, I'm your host. Today I'm joined by Adam. Adam, how are you, sir?
Hi, I'm doing well. Thanks for having me.
Absolutely. Adam is the vice president at Vista Business Group. And Vista Business Group, they do mergers and acquisitions. And I know what you guys are thinking, mergers and acquisitions? This is going to be so much fun. Uh, it won't be boring. Okay, we'll turn this into a kind of fun conversation because you guys know how I am. But with that, let's kind of just dip our toes in a little bit. So, mergers and acquisitions. Why do we care? You know, we're not T-Mobile and Sprint. We, you know, we don't need you, right?
Well, I mean, so yeah, good question. M&A, it's buying and selling businesses. So I imagine most of the people watching the show are all MSP owners, and so you know you may not be looking to buy a company to fuel your growth, but at some point, you're going to want to sell versus just letting the business wither away and die on the vine. So at some point, it's something that everybody has a need for.
Okay. So, um, I don't know. I don't know. I don't think I need you. I mean, I remember this company. They approached me because the guy wanted to retire, and he wanted me to buy him out, and
Hmm.
he was offering it to me for the low price of $250,000. And after reviewing, and I'll be completely honest, like I am not qualified to do any of that. Like at that point, I was doing like not 100,000 in gross revenue. Okay, so
Okay.
I was not I was not doing anything exciting. Okay,
Right.
so this guy wanted 250 G's, and I looked his books. He had like two completely different businesses. So one was like the IT company, and the other was like countertop installation. Like they do granite, and they
Okay.
were running all of it out of the same QuickBooks workbook.
Oh boy.
Yeah, so like they had like the chart of accounts like split up. So like, instead of using 3 or 4 digits, it was using 4 or 5 digits. And then like everything started with one was the IT company and everything that started with two was the granite company. So like I guess that works, but holy cow, does that just seem like a disaster, right? I couldn't tell because of that, because I'm looking at the chart of accounts for two companies. I couldn't actually tell like how much money are they making, losing, anything.
Right.
And so I basically just said, how about instead of $250,000 for this amazingly outdated office space, and this was 8 years ago, and all of these Windows 95 computers and CRT monitors. And is that an ISDN modem? Like what is all this garbage? I didn't want any of it. How about I just give you like $1,000 for your phone number and you go away? And there were a lot of curse words used, and some of them I didn't understand. They were in a different language. What did I do wrong, Adam?
Well, I guess at least the guy didn't just hand you a shoebox full of receipts and say, here's my accounting. So that's a plus. Um, yeah. So we represent both buyers and sellers, and so maybe it'd be helpful to kind of walk through walk it through from both perspectives.
Sure.
Um, so when we are representing a buyer, um, they give us their parameters. Well, first of all, we vet them, make sure that they're real and they're solid. But anyway, they give us their parameters and they say, hey, we're looking for MSPs in this geography, that are this size, and they give us the specs. So from that point, then we reach out. to the owners that look like, from the outside looking in, look like they're a fit. And so, we tell them, hey, we're reaching out on behalf of Steve, and tell them just a little bit about your story. And then if they have an interest in talking, then great. And so on that first call, we try to gather as much of the basics as possible. And so, we go over, why are they wanting to sell, but also their revenue, their EBITDA, and just the basics of their business. And then when we, after that call, then, we relay that to the buyer. And then if they feel like it's a good fit, then we set up an introductory call. So as far as like, to answer your question, what did you do wrong? I wasn't.
So many things is the answer, right?
no, just that, it sounds like maybe that guy wasn't necessarily ready to sell, or I don't know. I don't know what the situation was, but
I don't think he understood the value of his MSP. Well, it wasn't even an MSP. He did mostly break fix. So
okay.
I don't think he understood that like what he had was not worth. Like his annual revenue was like 160,000 gross.
Yeah.
And it was all like 50% of it was hardware sales at like 15% margin tops. And then the rest of it was mostly projects, break fix type work, which there's better margin on that, but he still has payroll and all that. And then once the project's done, like he doesn't hear from that client again for 5-6 years.
Right. Yeah.
So,
the business, the industry, it's mature enough that most of the MSP owners that we talk with, they kind of get at least some of the rough basics. But yeah, there's, I don't know, I'd say 10-15% of the folks that we visit with that, if they're doing, a couple 100,000 in EBITDA, and then they say that they want $10 million or something crazy. That to me, when somebody says that, they're really not ready to sell yet. But as far as your example, we have a client in Michigan, and before coming to us, they'd acquired a business a couple years prior, and it sounded kind of like a similar situation, but the particulars to it were that they're the owner's right hand man had tragically passed away, and so and the owner was not he didn't have the capacity. So anyway, he had a storm on his hands. So anyway, what they ended up doing is just they had an earnout, and they just said, okay, we're willing to pay you up to X, and we'll pay you over time. And just they had issues that were starting to creep up, and they had to take care of their clients right away. So they didn't really have time to go through diligence or anything else. They just went straight to putting the deal together that way.
Okay.
Anyway.
So when you represent the buyer, it sounds like what you do is you will do all the legwork to find the right candidate or candidates of MSPs that could be purchased. You will do the diligence and make sure that all of their paperwork is order, and that you basically vet them before we even talk to them.
To a certain extent, yeah. So
a little. You vet them a little.
Yeah, typically when we reach out, half of them say that, hey, I hadn't really thought about it, so I got your message, and then the other half, even guys that have been thinking about it for a while, they don't necessarily have, all of their numbers right there. But so on that first call, it's really just getting the rough basics, and so again we go over what are they looking to do first and foremost? Are they wanting to ride off into the sunset and go play golf all day? Are they wanting to stay on as an employee? That sort of thing. And then we also, again, we go over, what their revenue was last year, what their EBITDA was, what percent of their revenue is regular recurring versus break fix or project based, that sort of thing. And then after that, again, we relay that information to the buyer, and if they feel like it's a good fit, then we set up an introductory call, and then on that call, they'll know within the first 10-15 minutes easily if it feels like it's a good fit. And if so, then at that point, at the end of the call, then we'll say, okay, well, let's get some NDAs in place. And so we facilitate that. And then also we set up a data room that the seller can use to share their financials.
Now, what if a person that wants to sell reaches out to you and says, I want to sell? How does that work?
Yeah, great question. So we start our process with evaluation, and we don't charge for that service, but we offer it really for two main reasons. First is that we want to make sure that we're all on the same page with regards to price expectations, and so it's obviously not accurate down to the cent, but this is what we specialize in, so it's pretty dialed in. And so, when we come back to them and say, hey, Steve, based on where your business is today, if we were to help you take your business to market, the majority of the offers would be between X and Y. Then it gives them some numbers to base their decision around. And so if they say, yeah, that makes sense, then the next step would be to list their business for sale with us. And it's at that point, really up until that point, it's kind of like our companies are dating one another. But when they say, yeah, let's go ahead and list, then we charge 1% of EBITDA up front, which is then later netted out from the success fees at closing. But then right away, we build two really important documents. So the first one is a memorandum, which you can kind of think of it like a guided tour of your business for due diligence purposes. So it's a book on your business. And then the other is a teaser document. And that teaser, it's just a one pager. It doesn't have any identifying information of who the business is or anything, but it's a snapshot of the business. And so once we have those two things built, then we take it to market, and we market to all the buyers in our database, which there's thousands and thousands and thousands. And so we send them that teaser when they say, hey, yeah, I'd like to learn more about that. It looks like an interesting opportunity. Then we ask them to sign a confidentiality agreement. Once we get that back, then we send them that memorandum. And then, there's, depending on the business, the size of the business, location, et cetera, there'd be anywhere from a couple hundred to several hundred different buyers review the memorandum. And this is all taking place at the same time. And so, about, 3.5 to 4 weeks down the road, then we set a date and we say, okay, everybody that's interested in pursuing this further needs to submit their offer to us by such and such date. And so, and it's an indication of interest. So it's kind of think of it like a soft offer. And so, generally about 10% submit their offer. And then as those are coming in, then we share those with the seller, and then review them with the seller. And then also we help them to compare them on a apples to apples basis. And so once those are all in, when that date comes by, then we ask the seller to narrow it down to the top 3 to 5 that they really, really like. And all the way up until this point, we've been doing all the heavy lifting with, answering phone calls and emails and just talking with the buyers about the business, whatever questions they may have. And there might be one or two things that we have to go back to the seller and ask, but for the most part, it's pretty minimal. So again, we ask them to narrow it down to the top 3 to 5 that they really, really like. And then those are the ones that are allowed through the gate. So to be honest, the seller probably wouldn't like us very much if otherwise, if they have a business to run, and we're very protective of their time. So anyway, then cool. What's that?
That's very cool.
Yeah. So from that point, then we start setting up video calls, and then once those 3 to 5 have had a chance to visit with the seller and have their last questions asked, then they submit a hard offer, and then from that point, we help the seller to leverage the offers against one another and negotiate, so ultimately one of them's a winner.
So I want to come back to this, but first I want to back up a few steps, if you will. So you mentioned you've got the memorandum and then the teaser. Do you by chance have any of those like laying around on your desk?
I don't.
I was just genuinely curious. Like you said, it's like a book. So we're talking like dozens of pages or hundreds of pages.
Oh yeah, dozens.
Okay.
So yeah, like 40 to 50 pages. So
how much of that information is like canned or boilerplate stuff?
Very little. So there's I say that, but the structure is always going to be the same, right? Because regardless of who the buyer is, regardless of how sophisticated they are, they're going to need to know certain bits of information. So we cover things like. Go ahead.
Are you just like filling in boxes on an application, and then it is creating the memorandum and the teaser for you, so that way it's formatted properly, and you're just going through something that's almost like a wizard?
It's quite a bit more involved than that. So just that's a really good question. Let's kind of walk through that, what that looks like. So we. On the front end, again, we set up a data room. We have the seller upload all their information to that. And then Colleen on our team, that's all she does is put together valuations and memorandums. And so she'll work through it. And then after we have the valuation put together, then Colleen, Mark Obermuller, the president of our firm, and then whoever the lead is, we'll have a conference call with the seller and just say, okay, well, here's what it looks like, and then we just talk through it, and then when they say, hey, yeah, let's take it to the next step, then we generally have most of the information that's needed, but then we normally set up 1, sometimes 2 extra calls, and it's like maybe an hour to an hour and a half, where we go through, answer any questions that Colleen has, but then we also, we want to learn as much as we can about their story and what sets them apart, and so in that memorandum, then we talk about the specifics of the local market, obviously the story of the seller. So for example, maybe there's like 3 owners and 2 of them want to go play golf all day, but one of them wants to stay on board. So we describe the nature of that relationship. Also in that memorandum, that's when somebody is reviewing that memorandum, we're trying to answer as many questions as they're going to have specifically about that business. So if there's not saying that there would be, but if there is any oddities with the business, so maybe they had something wonky going on with their financials 3 years back, but by going through that with the seller on the front end and then properly documenting it and putting that into the memorandum, then there's no surprises. Things go smoothly all the way through till closing. So
Okay.
hopefully that answers your question.
I believe it does. So, why did you guys decide to specialize in working with IT companies?
Yeah. So once upon a time, we were somewhat agnostic as far as our industry focus goes, pretty diversified. But there's always a fair number of tech projects, IT projects along the way. And what we found is that, we like working with folks in IT, and then also, just the more projects that you do in a certain space, then the better you get at it.
Sure.
So there's that aspect, but the other thing is just from a bigger picture is that, that, as you know, the world of IT is consolidating pretty rapidly. And I think depending on how it's counted, there's anywhere from like 30 to 50,000 MSPs in the US. So it's a very fragmented industry, but also it's also like to a certain extent a fairly mature industry. So there's a lot of similarities, and you guys all go to the same conferences. You guys all kind of know, you guys understand each other's businesses pretty well. So that makes it good. So anyway.
Sure. Okay. And you mentioned EBITDA a few times. I probably butchered how to say it, but I do know that it's spelled EBITDA, or sometimes I flip the D and T around. So let's see if I've got this right. That stands for earnings before interest, debts, taxes, and assholes.
Always before that. So yeah, it's earnings before interest, taxes, depreciation, and amortization. So, and you can kind of think of it, yeah. So kind of think of it like your net cash flow. So it's a way to different businesses will choose to finance their business differently. So, if company A has a lot of debt on the books and company B doesn't, then it's a way to set them on a equal footing, apples to apples basis.
Gotcha. So, EBITDA is the perfect number. So all we got to do is figure out what that is for our business.
Yeah. so yeah, EBITDA is a super important number. And as far as valuation goes, EBITDA is what drives the vast majority of the valuation. But beyond that, there's other really important things to look at too. Other important numbers would be, like revenue. Even just top line revenue can give you indications on just clues and indications on what's going on underneath the hood. So a good example would be if you have two companies that they're identical in every way, except that company A has steadily increasing revenue, whereas the other it's choppy. Then again, all else equal, you think that it's going to be, you'd have an easier time owning the consistently growing business. And there's implications behind that too, right? So what percent of their revenue is regular occurring versus project based or break fix? Do they have, does this company have a lot of hardware sales? Does that steady Eddie company, do they have, what's the average length of the contracts that they have? Typically, a year versus the guy that has everything on month to month or quarterly. Maybe the steady Eddie company has price escalators already built into their contracts, that sort of thing. And at the end of the day, a good business is a good business. Obviously, all those things aren't needed, but to a certain extent, it kind of speaks to the mindset of the clients, but also the mindset of the employees too. So other important numbers. It would be just things that I mentioned. Another really big one too, and this one's really important as far as what drives value is client concentrations. So, if there's for a lot of MSPs, there's a zillion of them that are 2 million or under in revenue, and it's not uncommon at all for there to be a client that represents 10%, maybe 15% of total revenue. But when it gets to be 20, 25% or higher, that's when, as a buyer, if you were looking to buy that business, you draw a pause. So,
Gotcha.
Yeah.
So it's not just a magic number. I can't just multiply it by 5.
Right. Yep.
Okay.
Yeah.
Makes me less pleased, just so we're clear.
Yeah, it's not like houses. That said, again, it is a fairly mature industry, so the multiples, they are, to a certain extent, there is some standardization there, and everybody's kind of all on the same page, or at least serious acquirers are. So there's we we talk with some folks that they get it, and then we talk with other folks that, not very many, but some, they're like, oh, I heard I can get 10 times EBITDA, and if your EBITDA is $3 million, yeah, that's not anywhere near as much of a stretch. But for somebody with a couple 100,000 in EBITDA, 3 to 4, that's kind of the range that they're looking at. So,
Gotcha. Okay. Well, I think that's incredibly helpful. All right. So, do you prefer working with a buyer or seller?
Yeah, that's a good question. Really, from our perspective, it's kind of the same. So in any one transaction, we only represent one side or the other. So
wait, you're not like a realtor where you can represent both and take all of the commissions?
Right. So yeah, again, we only represent one side or the other. Maybe another way to look at that question is from the perspective of a seller. So if we if we come to you, we're representing a buy-side client of ours that's looking to acquire. If you fit their criteria, and we introduce the two of you, you guys really hit it off, and there's a great chemistry, then great. There's probably a high likelihood that there's a good deal in the making. But and that's because, again, we've vet the buy-side clients. But beyond that point, then if for whatever reason it's not a fit, it's not always going to be. Then at that point, we'd much prefer to represent the seller directly, simply because it's more efficient for everybody. Most especially, it's more efficient for the seller. So rather than us continuing to bring them one buy-side client at a time, and we don't pit our buy-side clients against one another. So, rather than us bring them one at a time, one after another, instead, if they just say, well, what options do we have? It'd make a lot more sense for us to represent them directly, and then we can bring them lots of buyers all at the same time.
And I gotta say, I never understood how a realtor could represent both the buyer and the seller, because whose best interests are they looking out for other than their own?
Yeah. I, I'm not a realtor, so I don't know.
That's fair.
But
That's fair.
yeah, you know, as far as we're concerned, again, we work with a large number of buyers, and some of them that we perform searches for, and those, they're looking for something very specific. So, um, you know, if somebody comes to us and they say, "Hey, I want to sell my business," it may or may not make sense to introduce them to a buy side client right away. Also, if the seller is like, if they're like, "Hey, I'm ready to retire right now, and I want to maximize the value of my business," then again, it would make that by far the most sense for us to represent them directly. So
Okay. So, ridiculous question time. Um, what's a hostile takeover, and can you help me do one?
yeah, sounds like a fun time, right? So no, we don't. We're not involved with those. That's really for publicly traded companies, and that's where outside investors want to take over the company, acquire all the shares, and it's against the will of the internal management. So I think guys like Carl Icahn, that sort. But yeah, we work with privately held companies. So
Okay, so I want to take my company public. I want to do an IPO.
okay.
Will you help me do that?
So we would. Uh, I guess I would ask why a person would want to take it public, but if they do, no, we would refer that out. But realistically, though, there are reasons for that, but really, by and large, a person can accomplish the same thing with private markets, um, very much the same thing, and you avoid all the extra regulation.
Okay.
So if a business is big enough to go public, I can say with certainty that there'd be tons of private equity buyers that would be lined up all day long to buy your business. So
Gotcha.
yeah.
So I know a couple of MSPs that have said, um, let me back up a moment. So,
Yeah.
for those of you that don't know, Rocket MSP also has some accountability peer groups. And one of the questions that I ask from time to time is, what is your exit strategy for the business? Because that's kind of something you should think about, Or if you're like 50 years old running an MSP, do you still want to be doing this in 10 years, 15, 20? If not, how are you going to politely step away without screwing over your clients? And that usually means you don't die, because it's a mess when people die, right? Like, so the one of my members said that IPO is one of his options for exit strategy. And I'm like, okay, well, I guess that makes sense. But when you say if you're big enough for an IPO, you're definitely big enough for private equity to get involved, then do we need to IPO? Why would an MSP want to go public?
Yeah. That's a good question. So um, really the only advantage to one of the main advantages to going public would be that um, once your shares are listed, then obviously it's a lot easier for ownership to change. from that point. But even then, you're still going to have some major institutional buyers that are, they're not going to be looking to let loose of their shares anytime soon. So, as far as the overwhelming vast majority of MSPs, there's really no need to. We work with MSP owners that all across the gamut. Some are mom and pop shops, and then others are tens of millions to 100 million plus. So let's put it this way, if an MSP's EBITDA is $1 million or greater, then all of a sudden that opens up the buyer pool substantially. If it's 2 million, even more, 5 million, those are like kind of magic numbers. And the reason I say it opens up the buyer's pool is that there's certain institutional buyers that they have very, very specific mandates that they have to follow. One of which is the size of the business, measured by a variety of different ways, but primarily by EBITDA. So once a company has an EBITDA of $1 million, then that buyer pool expands substantially. So in private equity, if they don't, there's kind of two plays with private equity. One is if they don't already have an investment in a particular space, then that's where that $1 million or $2 million EBITDA is really, really important for them. A ton of them have a $2 million minimum. A lot of them still have, it's $1 million. They're probably not going to look at it unless it's a million or really close to that. So once they're able to start taking a look at the business, then again, more buyers in the buyer pool means more competition, which means for the seller, then
now the seller might be able to get a premium rate.
Yeah, exactly.
Okay.
So the other play,
no, go ahead.
If you don't mind, just real fast. The other play with private equity, though, is that if they already do have an investment, then if they already do have an MSP, then size is much less of an issue. They still might likely will have a minimum, but in that case, then they would just be adding the company to their existing platform investment. So to be an add-on or a tuck-in, and so from there, they're just looking at, is it big enough for me to be interested? So $1 million, $1.5 million in revenue. So they all vary, but and then how well will it integrate with my existing business? So, and gotcha. Sorry, I didn't mean to interrupt you earlier. What were you going to ask?
Sometimes I just don't know when the sentence is done or if there's a continuation. You brought up private equity, so you did this to yourself, Adam. Is Vista Business Group at all related to Vista Equity Partners?
No, but they're an awesome group. Okay. Yeah.
Have you guys done business with them?
I think they looked at a couple different projects that we had.
Okay. Yeah. And you might not even be able to say, I don't know how this stuff works. All right. So because you brought up private equity, I'm now going to get onto my soapbox for a moment, and we're going to talk about private equity. So it seems like there's some kind of M&A frenzy in the IT channel right now. Am I crazy, or is this a thing?
No, you're right. It's definitely a thing. So there's a ton of consolidation taking place right now, and for the reasons that we mentioned earlier, it's a fragmented industry, and on top of that, it's somewhat mature, so that there's enough guys out there that they've been doing it for 20 years, and they either want to retire or they're just burnt out and they want to do something different.
So
Unlike, or go ahead.
I was going to say, so I can tell you're talking about MSPs right now.
Mm-hmm.
So that's good. What about the vendors? Do you ever work with maybe not Toma Bravo or any of those to help them acquire ConnectWise, but do you ever work with the smaller ones like, for example, Rocket Cyber, who just recently got acquired by Kaseya's? Is Kaseya Toma Bravo?
I, that part I don't know.
No, they're not Toma Bravo. They're someone else. I don't know.
Never heard of Tom Umbrella.
I might be pronouncing it incorrectly. Toma Bravo is the one that owns ConnectWise.
Okay. So yeah, there's big names: ConnectWise, Kaseya,
Yeah.
Datto, et cetera, et cetera. But yeah, to answer your question, do we work with vendors? Yeah, if they have a need, certainly. Happy to help them.
So
Um,
so when a company like Datto, who that company was a monster, and obviously it's even more so now. When a company like Datto gets sold to, um, that one was Vista Equity, for however many millions of dollars, is that a deal that you could have facilitated,
mhm.
or is okay?
Yeah, yeah. So yeah, we two parts to that. One is that as far as the types of businesses that we work with, again, we specialize in working with IT services, MSPs in particular. But yeah, um, we also took to market not too long ago a VAR. There's cloud solution providers that we work with. Some that are just pure cybersecurity. So there's been a couple SaaS businesses that we've worked with. Um, so yeah. And then the other part to that is size. So, um, we've sold businesses all the way up to, I think the biggest was like 130 million in revenue. So yeah, there's,
Gotcha. Okay.
yeah, all sorts.
So I'm going to ask some questions, and I suspect that. So if I were to say, I see a lot of private equity money entering the channel, and it really makes me nervous. You, by nature of working with private equity firms, are basically supposed to pacify my concerns. Is that
Right.
fair?
Sure.
Okay, so here's my concern with private equity, Adam, and maybe there's something that I'm not understanding, but
Mhm.
um, let's we're not even going to pick a name of a company because I don't want to misspeak, but let's just say a company gets acquired by private equity and it is an MSP channel vendor.
Mhm.
The thing that we MSPs start to notice is it's like they gut that company and put more cost effective people in place, and things really start to kind of not just roll downhill but like dive bomb, like things jump off a cliff. So tech support becomes abysmal at best. Rolling out new features slows down to a crawl at best. And then they start the M&A cycle of acquiring other MSP vendors. And the same thing happens to those companies. So then what happens is there's a private equity firm that just kind of has its fingers all over these companies, and it feels like they are focused on the bottom line. How much profit can we squeeze out of this? And what can we do to raise more profit? And Dave Sobel said it best. I'm quoting Dave, not because I'm trying to say he said it, not me, but because I want to give credit where credit's due.
Yeah.
Dave Sobel said it best, where once they get to a certain size, they will continue to always have revenue goals, like net profit goals. But once you get to a certain size, you can't like continue to grow. So the only way to increase your profit is by the acquisition of more companies, which is going to raise the profit when you look at the group as a whole. But then what they do is, like I said, they gut these companies, or it feels like they do, and then I just feel like everything starts to suffer.
Yeah.
Discuss.
Yeah. Yeah. There are some out there that's what they do. What I would say though is that by and large, the vast majority of them, that's not going to be the case. And if you kind of put yourself in their shoes for a second, that makes sense. So let's start out with, say your Rocket private equity group, Rocket Capital Group, and you don't yet have an MSP, but you like the space, and you're thinking about it. It makes sense. Yeah.
Millions of dollars ready to burn it.
There you go. So with your first acquisition, you're familiar with the world of IT, but you're not. The majority of them, they're experts at growing companies. They're not experts at IT. So what does that mean? That they're going to need the team and the knowledge base that comes with that team. And then even beyond just the knowledge base, they're going to need the team to continue to provide the support that generates the revenue in the first place. So that's one. Second, as far as add-ons go, kind of the same thing. If you think about, like, an example would be, if you're a private equity group and your platform investment is in Dallas, for example, and you're looking at acquiring an MSP in Denver, then your existing team is in Dallas. You're going to need people to run that Denver location. So as far as gutting them out, I mean, by and large, that's more myth than anything. The other thing too is that if you're talking with a private equity group, you want to find out as much as you can about who they are and what's their plan. Do they have a tight time horizon that they're looking to, or that they're operating around? A lot of private equity groups, they have like a 5 to 7 year window that they look to grow a company as quickly as possible through acquisition, and then turn around and sell it in 5 to 7, sometimes longer. So, if you're on the early end of that, then there's going to be different implications versus if you're on the tail end of that. So, again, I would say by and large, the horror stories that you hear, it's way more myth than anything else. They're experts at managing and growing a portfolio. They're not experts at routers and switches, and they're also not experts in your particular local market. So, the one other thing to add to that, once they do have an investment, then they look at themselves as the owner of an MSP. It's not that we're just this private equity group. They're an owner of the MSP, so the majority of them they you'd likely talk with. They're like one of them's we have one that is a client of ours that's a search client, and they're more of a family office, which is a little bit different, but anyway, they operate very much the same way. And on the calls that we have with them, they ask questions like, well, so what are your major pain points? How can we help? What do you need? What resources would be helpful for you? They're looking to help you really accelerate. That's what gets them excited, is you showing up ready to rock and roll.
Okay. Are there any unique deals that you've worked on that you could share some like cool stories?
Yeah. Well, we had one that somewhat recently that they catered that their client base, they had a lot of high profile folks in Hollywood, and that was kind of cool. But yeah, we can help people all across the gamut. That's one of the questions we get as well. I'm in this one particular vertical, so can you still help me? And the answer is yeah. Some of the other questions that we get are like, well, I'm in such and such location. Can you help me? Yeah. We're a nationwide organization. We have clients all across the country. We have partners within our company. There's 10 of us all together, and 4 of us here in the home office, and the rest are kind of scattered throughout the country. So the answer to that question is yes. One of the funny ones that we get is, well, I have 2 million in EBITDA, so can you guys help me? I'm bigger than most of the MSPs out there, so are you guys going to be able to help me? And the answer again is yes. Really, what they should be asking is, what's the smallest business that you guys have sold? Because the bigger they are, the easier they are. Just like we talked about earlier, the bigger they are, then the more buyers there are that are going to be interested. It's not that
Gotcha.
1 million in EBITDA is like an all important necessary number. It just, the bigger they are, the more buyers that are able to participate.
What is the smallest you've helped
that
you can think of?
There's a guy that he just kind of wound down his business, and he had a huge business at one point, but by the time that we met, it was just him, and he just does consulting for a couple clients that he's kept that he really likes. And we have buyers all across the country, so I mean we work with thousands and thousands of different groups. That'd probably be the smallest. And in cases like that, it's more of like hiring the person on for a while and then transitioning the book of business. It depends on whether or not they want to stay, but sometimes it's just like if it's a 1 or 2 person show, it's more of like a group hire than it is anything else. In other cases, it might be just like an earn out, like that example I mentioned before. So it just kind of depends.
So the last question that I have, what should we be doing to prepare ourselves to sell? So that way when we come to you, it's easier, and the things that you say won't sting as much.
Yeah. Great question. Couple things. One is know your numbers. So that's super important. Know
So
your
don't
numbers.
wait until, February 1st to do my QuickBooks for all of last year.
Yeah, I mean, that happens. That's fine. But know your numbers. Be ready to go. Um, the other parts would be um, what else? Depending on how what your time horizon is. If it's a couple years out, then if possible, start converting more clients over to an annual contract if you haven't already. That's not a make or break thing. I mean that's just like it's a nice thing to have, but it's not gonna, again, it's not a make or break. What else? Um, Another thing that a lot of people don't think about is like if you have a list of vendors, just an internal list, and you have write out like what your contracts, your contract dates are with them, and the terms that you have, and that's pretty important. What else? If you had like a blind list of your top clients, you can have full list or just say your top 10. Obviously you don't
And
put
by
client names
and
on
by
there, but
blind, yeah, and I was going to say by blind, you mean name free to
right,
protect the innocent and honestly
right,
to protect your income,
right.
because
Yeah,
somebody could be pretending to want to buy you, and as soon as they see your client list, maybe they just go out and sell to your clients.
yeah. I mean, I suppose that we've heard
I'm
stories
I'm
like
not
that, but
saying I'm not saying going through a company like yours. I'm saying
right,
someone convinces, "Hey, I'm thinking about, buying an MSP in your area. How about you let me take a look at your books?"
right,
Um, I've heard of stranger things happening. I mean, remember that time Grandma went to the store and got a bunch of iTunes gift cards to pay her taxes?
right, right.
Yeah. So,
And there's a guy in Mumbai that was helping her with that.
yeah,
um,
it was
yeah.
her it was her uncle, the prince of Tunisia.
um, yeah. So yeah, you're exactly right. Even when we're working with folks, we still tell them, we say very explicitly, no names, just client one, client two, etc. Um, and so, having a breakdown of that's really helpful.
Okay.
So, um, what percent of your revenue each client accounts for, how long they've been with you, what type of work you typically do, or so are they an MRR client, or are they just an occasional project based type client, that sort of thing. How much revenue comes from hardware
Got it. Okay.
versus the rest. You get it. Yeah.
So that's good stuff, man.
Yeah.
Is there anything else that you can think of that maybe we should talk about?
Yeah. So one would be that, you'd ask the question, if somebody's wanting to sell and they come to us and they say, well, what can you do? You know, not everybody is comfortable with the idea of listing their business, because in their mind they're like, well, gosh, I don't want the whole world to know that I'm for sale, and I get that. So in I'd say one is that anybody that asks to see the memorandum, they're going to have to sign, a really strongly worded. Um, there's a lot of protections in place in the confidentiality agreement. So there's that. But even beyond that, if they still say, hey, I just don't know that I'm comfortable with that. We have what's called a quiet listing, where we reach out to acquirers strategically.
Gotcha.
Yeah, so that'd be one. And then, just the other would be that, again, that there's enough MSPs out there that you guys all kind of know one another, or you guys can. I don't know. I'd say probably 2/3 to 3/4 of the folks that we visit with are at least roughly familiar with the multiples. And if somebody's curious, hey, what's my business worth if I were to sell? Give us a call. I'm happy to put together a valuation. And again, we don't charge for that. We do a ton of work when somebody decides to list their business for sale with us, or do the quiet listing. There's a ton of work that goes into that. So we want to make sure that we're all on the same page first, before we all take that next step together. And so, again, if you're curious, happy to put together a valuation for you.
I love it. All right. So with that said, everybody, if you are interested in reaching out, the website is vistabusinessgroup.com. Vista, just like your least favorite version of Windows, businessgroup.com. And it is now scrolling as a ticker on the bottom of the screen. How wonderful is that?
Yeah, or you could also just send me an email. It's Adam Borst at vistabusinessgroup.com. So Adam, ADAM, and then BORST at vistabusinessgroup.com. So, or you can just give us a call.
Or give them a call. So if any of you are remotely interested in buying or selling your IT company or another IT company, give Adam a call. If you're interested in performing a hostile takeover, do not give Adam a call. And yeah, thanks so much for coming out and doing this with me, Adam.
Yeah, definitely. Thank you for having me.
Absolutely. Well, everybody, this concludes today's episode of the RocketMSP Podcast. Thanks to everyone who watched, and you all have yourselves a great day.